This is Pat Walker at Mission Winners doing a training coaching video for everybody. I've been doing this for a long time. I was managing money through the crash of '87 and everything else since. There's an important lesson in this video. Charts talk. And I'm not trying to be cute and funny when I say that. Charts talk. Price and volume combined together give us telltale clues, signs on what's going on. You don't have to forecast. Just learn to read the charts with an open mind. Maintain a high degree of objectivity. So we're looking at AAR, and you can see it's trending up nicely for everybody. This is the 200-day, this is the 50-day simple, this is the 21-day exponential, and this is the 8-period exponential. And as you can see, and this is something we're really big on at Mission Winners, good entry and trends pay. And you can see how this is working here. It's just trending up the 8 EMA. Now, we didn't own this one, okay? I want to, full disclosure, didn't own this, but there's powerful information in the charts. It's trending up nicely, up the 8 EMA. And I'll say it again, trends pay more than all the decisions you'll make, folks. I'm not kidding. Riding trends like this. And here, good bar. Look at how it closed. Combine price action with volume action. But now look at this bar. It gaps down and it closes right near the lows of the day on heavy, heavy selling volume. That's not, that's not Uncle Ernie selling or Aunt B. That's serious selling volume. That's institutional selling volume. The trend is still up, okay? And it's walking up the 8-period exponential. But it is a warning sign just to watch. Not say sell, you're still above the moving averages, but just something to be aware of. Advance at 1 bar. And it falls again, but on much less volume. Okay, we'll watch it and see what happens. And it found support on the rising 8 EMA. By the way, this isn't textbook stuff, folks. This is living off the money, okay? That's what my life was for decades, living off the investing profits. Here we go. And I didn't have any wealthy relatives. My dad died when I was in my 20s. So here we go. Continue onwards. Bounce off the 8 EMA on a pickup in volume. That's good to see. Now, volume picked up, but it's still not that heavy. It was less than the 21-day or the 20-day exponential moving average volume. 21, see that volume right there? It's not that heavy, okay? But we'll watch it and we'll see what happens. Oh, look, it picks up on a pickup in volume. That's good to see. So let's suppose that you didn't own it. It's a bounce off the rising 8 EMA on a pickup in volume. A person could buy some. Now, others own it from down lower, and they're still in good shape. They didn't sell any because it's been riding up the 8 EMA. Although, where could have been a spot to sell some? You see that volume on that bar? That's serious selling. Still above the moving averages, but when you get something like that, that's a trigger. Again, that's institutional selling, so you sell some. And it bounces off the 8 EMA. You don't buy more, okay, because it's not that powerful. Continue onwards, and it's not a new buy either. It lifts up a little bit more, but on less volume than the day before. So it lost a little power. Then you get a quiet bar here where it closes down just a little bit on less volume. Everything's fine. The trend is up. You don't need to do anything. Just watch it. Now look at this bar. It gaps up a little bit. It runs up and reverses and closes near the lows of the day on a pickup in volume. That can be a flag to say, I think I'm going to sell a little bit more. Maybe I'll sell 20% more. All right, the trend is still up, but we'll take some action, okay? And then it drops down a little bit below the 8 EMA, but closed fairly strong on a pickup in volume, okay? So that's still constructive. You sold maybe twice to lock in some profits, and we'll watch it. And then it lifts up a little bit, but note, the volume's not that heavy. There's not a lot of power there. It's not a trigger to sell, but it's just telling you, hey, it lifted off, but there's just not a lot of buying conviction. Oh, it lifts up here. Oh, this is better. Price is good, but look at the drop off in volume. There's not a lot of power there. As I stated before, people talk with their mouths and vote with their pocketbooks. We go where they're voting, and they voted, but with less power. Not a lot of conviction to buy more, so you watch it. Now you get this bar. It gaps up. It runs up and takes out the highs of this bar, this reversal bar, and it closes in the bottom third of its daily range on a pickup in volume. It's not saying, hey, sell me, get out. But it is, I call these tail bars. where it runs up, goes down, and it's a tail up here, sticking out there. And this is an important lesson. It closed below where it opened. It's not much power in that bar. Something to be aware of. And then you advance it and say, oh, okay, it's hanging in okay. It's bouncing off the ADMA on a slight pickup in volume. That's not bad. Maybe I could buy a little bit more. But remember, these are add-on buys. This is not a clean and simple base breakout buy. So what do we do there to control risk? And here's an investing fact for you, okay? You buy, and I was an IBD meetup co-leader for years, so this is work. You buy more shares on clean and simple base breakouts. You buy less shares on pullback setups. That will really help you. So now let's advance it. Oh, look at this. It gaps up and it closes down. Volume was less. It did breach the 8 EMA, but it did, right here, it fell below it, but it closed above the 8 EMA. So what could a person do there? Maybe sell a little bit. You don't have to sell it all because the volume wasn't that heavy. Now, if the volume was really heavy, you definitely sell some. So we'll watch it and see. And then you get an inside bar here, all right, on heavy selling volume. And you're also aware of something, and this is an important lesson. We teach this at Mission Winners every day. You got to know the earnings dates. It's crucial to know the earnings dates. So there's some selling on this bar, right? Selling. And when you know where earnings are coming, you've got to be careful. And then you get this bar. It gaps up, it runs up, and closes in the bottom half of its range on less volume than the previous day, but still slightly above average daily volume. Maybe sell a little bit more. Take off 20%, okay? Don't sell it all, okay? Then you limit your profits. Take some off. You know what this does? A, it guarantees profits, and B, it lessens stress, which leads to clearer thinking. One of my degrees is in psychology, so we're big on that, okay? Minimizing stress. And you get this bar. Oh, it lifted up. Volume's just about the same in relation to this bar. There's not robust power here, okay? So just sit tight and wait. And then you've got this bar where it gaps, it opens unchanged basically, runs up and closes near the lows. What's the one saving grace? It's still a hair above the ADMA and volume was a little bit less. Okay, we've taken action a couple of times. Now you get this bar. It gaps down, it gaps up, it runs up and reverses down and closes right here in the bottom third of its daily range and closes below the ADMA and does it on a pickup in volume. Look at that selling volume, folks. On this bar, the stock did right there to the nearest 1,000, did 223,000. On this bar, 576,000 shares, more than double the previous bar. Right here versus here. It's telling you, hey, you better be careful, okay? Don't argue with it. What could you do there? Maybe sell another 20% off, okay? Never argue with price. And I need to also share this with you. This entire sequence here, all right? We're not looking at the 5 and 10 minute charts. We're using primarily the hourly chart to guide us, the daily chart, to guide us. Advance it one more bar. And then you get this right there. It gapped down, by the way. What did that? Earnings did that. Gaps down. See where it opened right there? When you get a big gap down and there's heavy selling volume, you better be careful. You better never argue with price. Right there, when it's doing this, that's a trigger to sell the rest. And that's where we're at. Using the rules, the tactics, backed by discipline, you were able to manage it, you were able to make money, and you were able to minimize risk.
Thank you for watching the video. We hope you enjoyed it. If you did, please hit like. Maybe hit that subscribe button. We come up with new content nearly every day. Also, check out the videos on the right. YouTube recommends the one on the top, and the bottom one is something we thought you might enjoy. See you next time.